Hey, this is the Third Coin Podcast, insight into the past, present, and future of blockchain, crypto, NFTs, and Web3 technology. This program is hosted by Grant Cermak, Dan Mueller, and myself, Louis May. You might say this is a series of discussions, interviews, questions, answers, opinions, and maybe some conversation about what is the third coin. Hey, thanks for joining me today, guys. We're to the point now where we've talked about a lot and we've kind of laid out a little bit of your all's knowledge across the 10 podcasts that we've shot so far, 6 of them available. And let's get into something new, which to the conversations we've had offline, something we haven't discussed yet is a Chia Coin, and really what sounds to me, from my understanding, another type of blockchain or technology. So am I correct in my understanding there?
Yeah, this is the new different type of coin. There have been some predecessors that sort of are trying to play in this same space. So there's a coin called Filecoin, and I think it behooves us to at least mention that there's other blockchains that are sort of operating in the same space as this one. But the thing that's interesting about Chia is the way it secures its network. So there's a couple of different ways that we've talked about: proof of work, proof of stake. So just to recap, proof of work is where you waste some of your CPU time or your ASIC miner or whatever trying to find the next block. And everybody is sort of wasting a similar amount of time until somebody finds the proof that they need to be able to create the next state of the database, the next block. And proof of stake is where you have very centralized validators that are able to create the next block. And there's some randomization factor that how proof of stake works. And basically it says, if you have enough of the coins that are generated in that specific chain, then you have the ability to participate as a validator and you can generate the next block. So the interesting thing about Chia is, instead of wasting CPU cycles or having to have a certain amount of coin in proof of stake, is they're doing a thing called proof of space and time. So the way they secure their network is to waste some amount of hard drive space. So what you have to do in Chia is create things called plot files. And you could think about the plot files in Chia as frozen proof of work. So essentially you do a bunch of proof of work ahead of time, and then you write that out to disk. And now all of that is saved on disk. And anytime you want to generate the next block, there's a broadcast out to the network and said, hey, here's the randomization thing of the next block. Here's some little challenge that somebody should have the proof for. And what happens when you're mining, or they call it farming in Chia, is you look at all of your plots and you say, could any of my plots have the proof that's required for this next block? And if it's possible that you would have the correct proof, then you go into your plot and you try to see if you actually have the right proof. And if you do, then you can generate the next block and you get the block reward. And what this means is that Chia uses way less energy, right? Because you don't have to calculate something. You don't have to run your CPU ragged. You don't have to have an ASIC miner that's soaking up a bunch of energy. You basically just need to keep a hard drive online, and then you do some nominal calculation that takes almost no effort whatsoever to generate the next block if you have the proof in your plot file. So it's intense at the beginning when you are creating these plot files, but that only happens for a very short period of time at the very beginning. And then over the lifetime of your plots, it's sort of keeping your energy usage as low as possible. So it's been speculated that Chia uses either 1/300th or 1/1000th the amount of energy that it takes to secure the Bitcoin network.
Okay, and so from there, what are the differences as far as how it takes care? Like, it has then coins that have the same safety in that they were produced as Bitcoin or Ethereum network.
So there's a couple of different differences in blockchains. And I believe we've covered this a bit too. There's the coin model, and then there's the account model. So Ethereum is an account model where you have an account, and then there are balances of different types of things that you might have. So you might have some tokens, you might have some Ethereum, and basic it operates similar to how your bank account does, where it can say, I have a certain amount. In Bitcoin, it's a coin set model, which means you have a certain set of coins. And when you sum those coins up, whatever value they have, that's the amount of Bitcoin that you have. So Chia works similar to how Bitcoin does. It's a UTXO model or a coin set model. So with Chia, you have a certain set of coins. And in Chia, everything is a coin. So whether you have a token or whether you have an NFT or a singleton, or you have a regular Chia coin, they're all coins. And so when in your wallet, you want to see what your balance is, you have to find all the coins that you're able to spend, and then you sum up the amounts on those coins. So you can think about a coin like a $100 bill. You might have a $100 bill, so the $100 is the amount. And then if you wanted to go spend that coin, you could take it to your friendly neighborhood, whoever would accept that Chia coin, and you say, hey, I want to pay you $2 for a cup of coffee. And then they would have to give you $98 in change. And so then you would have spent your $100 coin, and you would have gotten change back in a $98 change back, and they would have gotten a coin for $2. And so all transactions in Chia have to net to zero. So that's the requirement when you do a spend, is that you're not creating or destroying anything, that it always nets to zero. So the only time new coins are created is from farming rewards.
Dan, anything to add to that? Like, I'm moderately understanding this. I mean, I understand everything, but I'm still like, interested in the differences between the two, I guess. I didn't really understand the coin model versus the account model. So we didn't really talk about that from my memory.
So like Graham was saying, or alluding to, the Ethereum has balances. Like you could check your balance. You have so many Federal Reserve notes in your account, whatever. But the UTXO model that Chia and Bitcoin and some other coins use, they're actually coins. Like, and yeah, so some of the interesting things about that are, if you have 100 coins and you pay somebody a half coin for doing some work, the 100 coins leave your wallet, the half coin comes off, and then 99.5 coins come back. So
whereas that doesn't happen with Ethereum. You actually are breaking pieces off of your coin, and they just get that piece of coin. No?
In Ethereum, you don't have a coin. You don't have a coin at all.
Oh,
you have a balance. So my balance gets lower and his balance gets higher.
Aha.
But Ethereum's got all kinds of other problems, and it's not necessarily a superior method. It's just, you just got to think of it differently. So with Chia, for instance,
along the lines of talking about the differences, so that's a similarity. So Bitcoin and Chia are similar in that fashion, and Ethereum is different. And there's a whole bunch of blockchains that operate the way that Ethereum does, and there's a vanishingly small number that operate the way that Bitcoin and Chia do. So the coin set model is less common, for sure.
Oh, okay. And when you say there's a whole bunch of models that, or coins or blockchains that model the Ethereum model, are those still called Ethereum networks, or have they branched off and not even?
It's just an account model. So it's the way that you keep track of the number of the amount of anything that you might have. So it's the difference between an account model and a coin set model. So the only reason I bring that up is because you were asking for what are the similarities and differences, the things that we talked about in the past. So it's in this fashion similar to Bitcoin and different from Ethereum.
So before I go to the next question, back to Filecoin, and are there any other things that have gone this similar route, other blockchains, as Chia, or a total new idea compared to the coin model and the account model and the Bitcoin versus Ethereum?
So the consensus is what's similar to Filecoin. So the consensus mechanism is what we would call proof of work, or proof of stake, or proof of space and time. So Filecoin has a different kind of proof of space mechanism than Chia, but they are both using a variant. And I wouldn't even say they're in the same class. They're not in the same class. The level of mathematical rigor in Chia is vastly different than the level of mathematical rigor in Filecoin. So I wouldn't at all call these things peers. I guess I would just try to say that they're not the only proof of space sort of blockchain that's out there, but definitely, it's a difference between, I don't know, like a Volvo and a BMW. Like they're definitely both cars, but you would not try to race those two vehicles, and you would not try to say that they're peers in any way. Like, a BMW is a decent car and a Volvo is whatever it is. I'm not trying to bash Volvo drivers, but they're definitely different type of cars.
So Filecoin, it'd be safe to say, without getting into it more, that they just had different white papers and different visions for why they were creating these blockchains then, right?
No, I would say that the only reason I even mentioned is because I'm not trying to say that she has some unique snowflake, because that's come up, that, like people have said, well, other people have done proof of space and time before. And I at least want to acknowledge the fact that there are other things that are trying to do this. But I would say that they're not in the same class, and they're not just different white papers. This is completely different. And it's the difference between somebody who's a real scientist and a real mathematician doing something, and I don't know, somebody that's trying to do it and maybe isn't.
I don't know enough about Filecoin to really say too much about it, but I know that I don't have any resources to try to farm any, because I'm farming Chia, full disclosure. And but one thing that I'm looking into Filecoin, because I do have a little empty space here and there where my Chia plots don't fit, is if Filecoin actually stores data, whereas Chia stores the result of all this hashing. That is, think of like the hashing that happens on a Bitcoin network, all that wasted energy. On the Chia network, all that hashing gets stored to a file. So it's like steaks in the freezer for when you're hungry, or when you have, when you need them. Super low energy, but once they're created. But yeah, that's a difference. Filecoin, you can actually earn coin by storing other people's data that you can't see. And they're not the first ones to do that either. I mean, back in the day, we were doing Chia Coin, and there's other things. I think I still have a few thousand Chia Coins somewhere, but nothing really ever came of that.
Okay. So then back to the differences and the similarities. We have Chia over on the coin model, not away from the Ethereum, but now I know, and I'll let you describe it. I know Chia has some of the same capabilities as the Ethereum network as well. So I think that's the next part to discuss here, right?
Yeah. So I think when we're talking about like, why is Chia interesting? So when they created Chia, essentially said, okay, let's look at over the last decade, what were the successes and the failings that happened within the blockchain space? And if we were to do Bitcoin again right now, with everything that we know, how would we do it? That's kind of how they thought about it. And basically, I think in 2014, 2015 is when Chia first was conceptualized and was starting to be thought about and worked on, and when they started on the math. And then when it actually launched in 2021 and went mainnet, that's the amount of time that it's been cooking. So this is not a new project by any stretch of the imagination, but it has been conceived as, what have we learned and what would we do? So there's a lot of parallels to Bitcoin, because largely the creator of Chia, Graham Cohen, looked at Bitcoin and said, they got a lot of stuff right, and we want to follow on from the successes of Bitcoin. But there are things that Bitcoin should be doing and hasn't done, and we want to incorporate those right away. And let's learn from the successes of Ethereum with smart contracts and try to bake that in from day one. So the idea behind Chia is that it's kind of Bitcoin 2.0. How would you do Bitcoin if you were going to do it today? Integrating smart contracts so that it's a first-class citizen, and that you can do really intelligent style blockchain programming, and then low energy use. So, I think if you were to take any one of those things, it would be big news in the blockchain world. But when you take all three of those together, that's pretty big. That's huge. And so there are people who are really, really excited about Chia. And yeah, I'm one of them. I'm very excited about what Chia is capable of doing and what it's been doing lately.
You said
So there's a
three
lot
things.
of very interested decentralized stuff.
Okay, we'll get into that. You said three things though: the smart contracts, the low energy, and then what would that third kicker? Still decentralized
Tokens.
Well, it's the three things are: what would you do if you were to redo Bitcoin today?
Yeah,
and those are very technical things. I don't know that we necessarily.
Okay. So there's that third element that we don't even really need to talk about because it's just the deep technicalities of the program.
Yeah, it's really esoteric math stuff about how you can do extremely powerful stuff, like Taproot, and I mean, it's just I don't even really want to go into it, but it's just like, imagine that you were to take everything that you could possibly think about how you would do Bitcoin if you were to do it 10 years later. Because I mean, we move forward. I mean, skis are a good example of that, right? Like if you took a pair of skis from 10, 20 years ago versus a pair of skis from today, the skis today would be lighter and they'd be faster and they'd be better in so many different ways, because millions and millions of dollars every year go into saying, well, how can we make a better ski?
And they literally are better, that much better.
Yeah. It's the same thing with bikes. I mean, if you take a bike from 20 years ago versus a bike today, the bike is just way better. So like, take blockchain. What if you did it 10 years later? So that's number one. Number two is that proof of space and time, the low energy. That's huge. That's huge. And then you have first class smart contracts in a different way than how Ethereum did it. So I'm saying those three things are sort of the big differentiators for Chia. And there's actually probably 10 you could go through. I'm not prepared to talk through 10.
That's all right.
Because I think those three are well sufficient to sort of get anybody excited about Chia, and the ways that it's manifested itself just within the last year. It's very exciting stuff that's happening.
Well, so let's go into every little new thing that kind of some of these new exciting things that's happened, because this is a new blockchain. It's literally only been around for not even a year yet, right? I think it's a year.
Well, since mainnet launch. Yep, mainnet launch was March.
There we go. So we're coming across 1 year. Let's talk about all the cool things they've done and accomplished. And then I'd like to kind of, let's go there first.
Well, I want to kick this one back to you, actually, Lewis, because you've had some experience recently with buying Chia, working with cats, and then doing some trades, right? So maybe let's just start with buying Chia. That was painful, right?
Yeah, I mean, the most painful part really isn't the actual buying of Chia. It's getting your resources to the proper place to buy the Chia.
Right, and
so there's a loss of resources.
This is a new coin.
Yeah, to get it to a market that allows you for the Chia thing. Once you have the Chia, it's actually really easy to get it back to your wallet,
and fast.
And very fast as well.
Right. So one thing that happened, because I remember you and I worked together on your first and your second Chia purchases. And the first time you did it, you were trying to transfer Tether. And you learned pretty quickly that half the Tether you had got eaten up by the gas fee to transfer the Tether you had left.
No, first it was Bitcoin. I just used Bitcoin. Okay.
Right.
And the original plan was to go from Bitcoin to Dogecoin, because we know the network's cheaper. But I think even in between there, it was
you did some Bitcoin cash transfers too, and that was fast. They have the zero conf, so you could see it, but it still takes so many transactions and so many blocks before you can spend it. And then you do the internal accounting on the exchange. You're like, I'm going to trade from this coin into this coin, and then you can buy your Chia. And once you have your Chia, you can transfer it out to your Light wallet or your full node wallet. The Light wallet is the one that supports CATs, or Chia asset tokens, for now. And the most recent version of the Chia Light wallet now supports offers. And this is something that's so exciting. It's such a game changer, because now you don't have to go to the exchange anymore. You can literally buy your Chia with other assets right from within your wallet, and it's all on chain, and you don't need to go to an exchange anymore. You just need something of trade value.
So let's back into that a little bit slower, okay? So that we can kind of compare all of these rookie things to this something that you're just talking about that a lot of people might not even be aware of, which is, from my perspective, I had wallets and I needed the wallets to transfer. We found out that Coinbase is nice in certain ways because they do all of their actual accounting off the chain. So I didn't get any fees to transfer little amounts of this kind of coin into that kind of coin, into this kind of coin, into that kind of coin. It was all just free transactions. And then they, from my understanding, then when I go out wallet from there, that's where they then go on chain and record my last transaction. So that learned
right
that
when you exit, that's
when I
and
exit,
just to tie that right, and then tie that back. That's kind of all, you know, above layer one, right? That's something they're doing internally. However, they're keeping track of it. They're probably not even using layer two. They're doing all their own internal bookkeeping with their own databases. And the only time they have to really do something is when you say, I want my money out of here somewhere else.
Yep. And so I learned those those differences, you know, like what is happening here and why are they letting me do this? And then what is happening here? You know, so then the next stage of that is when you learn to try to do stuff on chain or on network. And now then you realize, wait a second, now I'm getting charged here. And you start to look across all the different networks of how could I move X to Y using A, B, C, or D. And there literally is different, like what I ended up doing, Dan was worried that wouldn't work, but I ended up using the BTC network to transfer my Bitcoin and at the same time turn them into Bitcoin Cash, which somehow worked because of the way I was, the one wallet I was using.
I think there might have been, yeah, you were using that, what was that service you were using?
Uphold.
Uphold, right. So so one thing that you never want to do is send Bitcoin Cash to a Bitcoin Core wallet or the other way around, because if you do that, you lose your money. It's just, it's gone. So that's what I thought you did. And I was like, oh no, but you know,
but
they saved you from yourself. So
yeah. So that was probably Uphold doing some off-chain maneuvering first, so that when they went on chain and wrote it,
like,
I wasn't
he can't
an unhappy customer.
To do this. No, he doesn't want to do that. That's not, no.
So I learned that could happen and that I got lucky or did it right. You know, one of the two, but you know, learn that. And then we got to another, you know, then I was able to take my Dogecoin, which is still a good method of transfer from wallet to wallet from my point of view, because it's cheap, you know, so
not as cheap as Chia though.
No, not as cheap as Chia. So then I got the Dogecoin over to a wallet that also traded Chia. And then I take the Dogecoin and change it into Tether, essentially. And then from Tether into Chia. And that
correct. So just maybe to clarify a couple of those things. So you're starting in Coinbase and you got something that you could move. You took from Coinbase to a different exchange.
Yep.
Right.
Now, when you're in this other exchange, you have some currency and there's only one trading pair on this other exchange, and it's Chia to USDT. That's a USD Tether. You know, the fraud that is Tether. That's the trading pair. So you have to get some USDT, and that's okay because you're going to hold it for about 10 seconds and you're going to swap it for Chia, right?
Yep.
So you take whatever store of value, maybe $100, $200, whatever you did. You had some amount of money in real world value. You put it into Tether, and then you swapped it to Chia, and now you have some Chia sitting on the centralized exchange where you can get Chia. And at that point, you withdrew it to your own non-custodial wallet, which is I'm in control of it. It's mine. It's my 24 seed words on Chia, and now you have it in your hot little paws.
Which from my point of view now seems like Chia is one of the few non-custodial wallets that like is simple to, I don't know, are they all like that, or is that kind of one of the better ones as far as storing blockchain these days? Like when it comes to non-custodial, because I feel like I got into the realm of like doing stuff that a lot of people who are investing in Bitcoin never even do, which is that.
Grant just summarized what happened pretty succinctly, but I think he glossed over something pretty important. And I don't mean to belabor this point, but I think it's worth repeating. You transferred value from Coinbase to MEXC or another exchange so you could buy Chia. And you had to do that in the form of Tether. But the important thing is that you transferred, before you transferred from one exchange to the other, you moved to a currency that had the cheapest transaction rates, and that could be Bitcoin Cash. It's a good one, or sorry, Dogecoin, and that's a critical piece here, because otherwise, with transaction fees, you can lose a lot of your money just in moving it. So sorry for being remedial here, but I just wanted to point that out for anybody who's paying attention.
That's what I learned from this whole process, is how they all kind of have their different benefits when it comes to just that.
Sure,
and then
but you don't want to stay in Tether any longer than you have to. That's musical chairs, and you do not want to be holding Tether when everybody asks for dollars, because you're going to be shit out of luck.
Someday that's going to happen.
Oh yeah.
And so then I had the Chia, and I moved it out of into the, like you said, into the Chia Lite wallet, which now I have a couple of other things in there as well.
Let's talk about custodial versus non-custodial just for a second. So custodial, it means that somebody else is holding on to the coin for you, and you don't really have access to the private keys or the deterministic seed words that would produce the keys that would allow you to move the coin. Like, they're doing that part for you. And a lot of the exchanges, whether it be Kraken or Coinbase or Gemini, all of those are custodial. Like, you are not in control of your private keys, so they're holding it for you. And that's how they can do all of those fun tricks and give you no fees and swap things around and undust your coins and your accounts and all that fun stuff, because you're not actually in control of it. Now, as far as custodial, you can self-custody almost every single coin or blockchain there is a way to do it usually. I don't know of a single blockchain where you can't self-custody your stuff. However, the friction to doing that, it can be high. You could have to have a substantial amount of resources on your machine, whether it be space or CPU, devoted to being able to self-custody those funds. Certainly there are self-custody wallets that exist that will manage a variety of different assets. I mean, there's like a single vendor who can handle, I don't know, thousands of different blockchain technologies in a single interface. I mean, I'm certainly aware of those types of solutions. So the Chia Lite wallet just happens to be the one that Chia is providing. And that's because of some of the big vendors that provide, thousands of different coin supports don't support Chia just yet. It's very new, very, very new technology. And the reason a lot of them don't support it is because Chia is using very, very new underlying technology. They use some libraries and some cryptographic mechanisms that are just not that well supported elsewhere.
Okay.
Okay, so you've got the coins from Chia that you bought. So you have some XCH, so that's the ticker symbol, and you've got it in your Lite wallet. Okay, and so now on your box, you've had this experience. Like, you turn the Lite wallet on, it spends some amount of time farting around until it says synced, and then now you can do something, which is you can either move your Chia from one address to another, or you can do something more interesting. Which what did you do next?
Well, so I'm just doing that, and then I've collected some tokens at this point as well. So I also used a faucet. I found a Chia faucet that gave me a little free Chia. I believe and then I have some other tokens, and so that was the other new experience for me now, is kind of learning a little more about the world of tokens, and what's going on with them, because to me that's like the new thing, or from my point of view, learning with you guys, tokens are the thing that everybody's into right now, that are hot. There's a lot of buzz around tokens, and I'm still understanding why and how and all of that stuff. But to me, like just this learning experience to me was starting to give me more of an understanding of the real world implications or just what blockchain is and how it works. So now learning about tokens are kind of doing that same thing, because I figure this is another one of the evolutions of blockchain, right?
Yeah, and so on Coinbase, I'm sorry, not Coinbase, CoinMarketCap, you look, and there's, 15, 20,000 different coins, 17,146 today that are listed. And there's a whole bunch that aren't. Most of those 17,000 shitcoins are tokens. Vast majority of them. Shiba Inu is a token, but Dogecoin is a blockchain. So coin versus token. So on the Chia network, you can mint tokens now. using their Cat1 standard, Chia asset token Cat. So tokens on the Chia network are referred to as cats. And so there's a whole, and so like back in November, the very first reference cats came out, and then a few early cat creators came out. So as of the end of November, there were only a total of 4 cats, maybe. And that started changing around the end of December. There was a few more, and then they started talking about it, and they actually opened up the, they released a more stable version of the Light Wallet, which is still in beta, which supports cats. And all of a sudden, just in the last week, it's been an explosion. There are, like yesterday or the day before, there were 84 cats, whereas a week before, there were less than 10. And I don't even know how many there are today. There's, you can go to taildatabase.com or xchtoken.org, and you can look at all the different cats. You can tell a cat by its tail, which is a long GUID, which identifies it as a unique token. And you can look at its supply, how many there are, et cetera. And people are building some recognition around their tokens. They don't automatically show up with the correct name in the Light Wallet. You have to look at the, you know, what it is, or you have to pre-populate your wallet by adding the token by its tail and naming it, and then you can receive funds. And right now is a golden era because almost everyone is giving away their tokens in various promotions to raise awareness of their project. So
this is the second time we've talked about tokens, maybe the third, but it's still kind of new to me. Maybe would either of you like to start at the beginning of tokens and what set it all off, and why is this taking place, maybe from you know, the experienced blockchainers perspective?
So you start with just the basic blockchain, and you have a reward for participating in the security of the network. That reward is the currency of that blockchain. On Bitcoin, it's a Bitcoin. On Ethereum, it's ETH. Okay. So in each different blockchain technology, you have the fundamental currency of that system, and that fundamental currency is the reward for participating in the security of the network and the generation of new blocks. That's important because you have to have a reason why you would devote your computer resources, which cost you something in the real world. You're using electricity, you're using hard drives, whatever you're using. There's some cost to you as a farmer miner that you need to be compensated for doing that. If there was no compensation, why would you do it? Right? So you're earning Chia, you're earning ETH, you're earning BTC. Okay. So, and that's fine. Now we have some value on these coins, and you know, some people might want them. You can sell them for real cash, and that has to be done off chain, right? If you're going to do some exchange of monetary currency, this was in the early days of BTC. You would have these sort of meetups. You know, you would meet someone in meet space, you know, out in the real world. You would say, "Hey, give me some cash, and here I'll transfer some Bitcoin," and then they'll validate that they've received the Bitcoin, and they'll give you the hard currency, and then you'll walk away, right? That was then extended to centralized exchanges that would facilitate that sort of a transfer in the digital realm, right? So I transfer some of my money using an ACH transfer or a wire transfer into Coinbase or something. Now I have my fiat representation in Coinbase. They're saying, yeah, we've got the money, and now we'll trade you your USD for BTC or whatever, right?
Yeah.
Okay. So if you want to make that a more generalized mechanism, then you can do what's called a token. And a token in Ethereum or in Chia is a representation of something else. So in Ethereum, the most important type of tokens are what are called stable coins. So stable coins are a representation of fiat currency. So somebody says, hey, I'm going to make this token, and this token is something that lives above ETH. It's a smart contract that lives on the Ethereum network, and there's a certain amount of these tokens. So there's a supply and there's a standard. So in Ethereum, it's called the ERC20 standard, and there are a bunch of addendums to that standard that sort of fix a bunch of problems. So there's 223 and a bunch of other stuff, right?
Okay.
And these tokens have the ability to be anything. They can be representative of something like a dollar. So there are various different stable coins on Ethereum that are trying to represent dollars. And they're saying, for each of these tokens, there's exactly $1 that backs it, right? So Tether says that they're doing this. USDC is doing this. And what that allows you to do is you can bring some dollars into the Ethereum space, and then you can use those dollars to trade them for other types of tokens, or you can trade them for ETH. So this is a way to sort of do on-chain trading of stuff that you might be interested in doing. And that's supported in Chia too. So whereas in Ethereum, we have this ERC20 token standard, in Chia, we have this thing called the CAT standard. And that allows us to create something that's on top of the regular, just the Chia network, right? And when I say on top, it means that it's above that XCH. So it's not better than, but it builds on top of it. It allows you to do something that's not XCH and to have something else represented. So on Chia, we actually have a stable coin. So there is a company called Stably that created something called USDS. So that's the representation of dollars in the Chia network. So using the CAT standard, they've created a stable coin. So now, if you want, you can go to Stably, you can wire them some money. They'll give you a certain amount of USDS, which you can have in your Light wallet, and now you can buy some Chia. So that's kind of cool. You have like an on-ramp through Stably.
Let me back up before, because there's more on this. Just because a token is a representation of something in the real world doesn't mean it necessarily is, though. Am I correct there? Like, if it represents something in the real world, then there's some legalities of doing business in whatever country you're in, and actually, off-chain bylaws or some type of rule saying we're going to have this cars. Like, I want to be a junkyard. I could have a stable coin or a token for every junker that I have in my yard. But technically, there should be some off-chain paperwork that says, yes, when you possess this, you are possessing the representation of this, this, and this.
Yeah, that's like a trust relationship with whatever token issuer, right?
Okay.
In Chia and in Ethereum, you don't have to be backed by something. It's just certain companies are saying, well, we are. And they have ledgers and books to prove this, right? They say, yes, hey, we actually can show you our bank accounts and show you that every token we've issued, we actually have $1 and it's sitting here in some money market fund or something like that, sure, right? So
but a token can also just be, like you've said before, I'm quoting you from off camera, it's just a serial number.
Yeah, it's just whatever it is. Like, it doesn't have any backing. And those things might have some value if somebody wants to ascribe them a value. The interesting thing about Chia is in the CAT standard, they always ascribe a base level of value to the standardized CAT creation process, which is 1,000 mojos is what any one CAT is worth. So it has an absolute floor. And this has to do with the way that you create CATs. So when you create a CAT in Chia, you have to take some amount of XCH and lock it up, burn it in a sense. You use that Chia to create the CAT. So for instance, in the default mode, when you use 1,000 mojos of Chia to create one CAT, that means that if you were to use a whole Chia, so there's 1 trillion mojos in a single Chia, that you would be able to, using one Chia, create a token that had a total supply of 1 billion, because you have to lop off 3 zeros, right? So a trillion is a 1 with 12 zeros behind it. So a billion is a 1 with 9 zeros behind it. So that's the 1 billion. So a lot of the CATs you'll see have that particular sort of.
So is that unique? Is this idea or this concept, what they're doing, unique to the Chia network compared to?
It is. This is not how it works in ETH. You do not have to burn ETH to create a token. You have to pay gas fees to create it because you're running the EVM, but you do not have to burn a certain amount of ETH to create a token.
So real quickly, Solana, is that a token? Or is that a network?
I'm not prepared at this point to talk about Solana. Solana is a blockchain, so it's not just a token.
Okay. What about some of the other popular names that are out there, like Cardano? Is that a token or a coin?
Also a blockchain. When you say coin, I would prefer the word blockchain.
Blockchain. Okay. Because so from my point of view, it just seems like Chia is coming into the game here with a different purpose behind it and a different marketing strategy, not like a lot of the others where it seemed like they were just basically doing a money grab. Like, hey, we gotta market this thing. We gotta make the reasons of why this thing should exist. So a bunch of people start paying in and creating volume of trading. Is my perception of that correct?
I would say that each blockchain has some reason that they brought it into existence. Like why they brought it into existence, it has its own reasons. If you look at Ripple or if you look at Solana and you go to their website, they will say why they've created it and what they think they're doing to differentiate themselves and why they think they should exist, right? And so a lot of these are all proof of stake. Like that's the consensus mechanism. So many of the newer blockchain technologies that have come out, they're just using staking as their consensus model. And that's a very centralized way of doing things. When I say centralized, it means there are very few machines that are actually creating that blockchain network. Yep. In Bitcoin, that's different. There are quite a few machines that are involved in that. I think something like 40,000 or 80,000 machines are involved in creating that. And when I say machine, it's like
loose term
location that has compute resources devoted to this, because each ASIC miner or whatever is sort of collapses into the same compute resource machine that would be part of that node.
Yep. And so then how does Chia compare to that with its network diversity or networks decentralization then?
So Chia claims the most decentralized, most full nodes of any blockchain.
Very interesting.
The most.
So
I think I've heard counts of 200,000. I've heard counts of 400,000. I'm dubious of those numbers. From my own analysis, I know that there are at least 100,000 unique farmer things that have happened. That's pretty well known that it's around 100,000. That means that 100,000 addresses have collected a farming reward. Now, as a farmer, it's really easy to change your farming reward address. So as a farmer, you could have been changing every single time you earned a reward, you could generate a new address and farm to a new address. Okay. So it's not clear exactly how many. Now, Chia has a way to walk their entire network and say, who are all the people who are trying to farm, right? And how many different unique locations of people are out there. And they have routinely said 200,000 is roughly how many full nodes are participating in farming. And the reason that it's not unique addresses within this space particularly is because there's a lot of sort of small guys that are participating in these pooling things. And if you're a small guy that's participating in a pool, you might never find a block. You're earning, but you're never finding a block. So if you have some small amount of plots, your estimated time to win might be 2 years or 4 years, and you're just never going to find a block. Now, you might get lucky and find one in your first 2 days of farming, but you might also spend 16 years farming and never find a block.
So this diversity of network, this seems like it may add to the future strength of Chia then in its ability to do on-chain layer 2 things like Ethereum is having problems with now.
So the decentralization of a network is a strength of the network. The bigger your space is, the more people who are participating in it, the more resilient your network is. So you can think about that just the same way as like if you were to have a whole bunch of machines that are participating in some activity, if any one machine goes down, the whole network doesn't go down. So if you have 200,000 that are participating, that's pretty substantive. If you have like a lot of proof of stake networks, a couple hundred, well, now you're into a different space of what would it do to sort of try and take this thing down or to take it offline. And I think that's where you're starting to see some chains that are based off of proof of stake stalling, not working, just fundamentally not running the way that they want to. And that's because they're having trouble generating the next block. When you have only a couple hundred, it could easily be where you just have some reason why you can't generate the next block because all the machines are experiencing sort of the same type of issue. And I think we've seen this where very centralized chains don't run reliably.
Got it. And what are the implications? How about for the last thing I can think of, just to kind of the last part of introducing Chia, the implications for NFTs and on-chain storage of data?
So that just gets into the whole realm of smart contract programming. If you have a blockchain and you don't have any means of programming on chain, this is the way Bitcoin started. I don't think that they had any smart contracts, anything. The only thing you can do is sort of generate the next block and then do transactions and sort of spend coins, right? So you can have some coins, you can spend some, you can get some change back, and that all works just fine. But if you don't have some sort of a programming layer on top of that, you can't do more interesting style things. So Chia does have a smart contract language built into it, and it's called Chia Lisp. And that programming language is what they use to create tokens. When you're talking about an NFT or something like that, it's a smart contract. It is a way to arrange data on chain so that you can do something slightly interesting. And in the Ethereum world, what you're doing is you're creating a non-fungible token. So it's not like ETH where it just goes into a pile, but rather this specific thing that you have, it's unique in the entire universe, right? There's one of it, and there can only be one, and that's what it means for it to be non-fungible. It like the fungibility of something is like gasoline, right? When you go to buy gas, you don't have to say, well, I have this specific droplet of gas. Like you put a bunch of gas in the car and it mixes with the last pile of gas that you had, and the car just goes. That is how ETH works in the account model. You just have a bunch of fungible stuff, and all of its tokens are fungible in that same way. When you create a non-fungible token, it means that there's no ability to pile them up. You have to keep track of it individually and separately. And in Ethereum, you're coupling that non-fungibility with some pointer to image data. And now you can make crypto
or essentially any type of data
Bored
you
Apes
want
or whatever.
That's off at a website, right? And it can
Yeah,
just point
so
to data.
NFTs have the ability to point to on-chain data, or it can point to off-chain data. So in Ethereum, storing data on-chain is very expensive. If you wanted to store some, I don't know, 1 megabyte file on Ethereum, that would be very expensive, especially with the way the gas fees are right now. So you pay for each byte, not kilobyte, not megabyte, but you pay for each byte on Ethereum, and a substantive amount per byte. So I think back when CryptoPunks were created, if I could be mistaken on this, but I'm pretty sure this is how it worked. CryptoPunks were created at a time when Ethereum was very, very low, so $20 or something like that, and they embedded that data on chain. And so those are actually sitting there in the Ethereum network, stored on chain. So each miner in Ethereum has a copy of that image data somewhere in that database.
Okay.
If you were able to sleuth through the database, you could actually find those pixel bits.
Which means that those are safe NFTs then, because they actually point to a data that is locked in forever, essentially, as well.
I don't know if I would call it safe necessarily. There's other ways to make data safe. It's not the only way. It's a way. I'd say it's not even a sustainable way. You certainly don't want to be dumping a lot of data into the blockchain. It's not really the right place for it. So I'd say it's possible. You can do it. Probably isn't recommended. And likely there's only these very, very small periods of time where that would ever be possible. And after the blockchain receives any amount of real traction and real usage, and blocks are relatively full, the fees associated with a block will make that be a not possible situation to try and embed data within a block.
Even for Chia, essentially.
Well, it's possible for Chia right now because the blocks are relatively empty, but there have been periods of time where Chia has undergone what's called dust storms. And so this is where somebody is like, hey, can I just fill up all the blocks with garbage? And they've definitely been successful in doing that because fees are at zero. But as soon as there's pressure in a block, there's more people who want to write to the next block than there is space in that block. Then you start to say, well, anybody that has attached a fee will get priority in that block.
Got it. So this is one of the future problems to be solved then, is as we get to more real world usages for blockchain technology and the need to integrate with data. I mean, that data is going to be most likely probably stored off chain on a network somewhere, and that hasn't been totally solved because this is a newer problem in the technology, right?
I'd say it's solved. The
Okay.
onus really falls to the person who wants that data available to make it available, right? So as a person who buys an NFT, I think you have to be committed to keeping that image data somewhere and making it alive until such time that you would want to transfer it. And if that means you want to make it alive continuously, then you would have to continuously make that data available in some fashion. And what you do on the blockchain is you keep a record of the data so that if somebody says this is the data and you can get it here, you can validate that that's the correct data.
Okay, interesting. I mean, this was a great conversation today. We kind of went from the beginning to the end of like how all of the things we've talked about before now are interwoven into Chia. So, I mean, a great start. We have tons more to talk about, right?
Oh yeah.
Yeah. I think there's a really interesting thing that Dan was starting to reference, which is trade offers. Maybe we can just preview that one, and maybe we'll take a little bit more time to talk about Chia next episode, and then we'll really get into detail on trade offers, because I know that Dan's really excited. So you want to give us a quick preview, and then we'll call that for the next episode.
Perfect. Yeah, Dan, what the heck are trade offers, and why is this neat?
This is not just neat. This is a game changer. It's revolutionary. So if you're one of these 17,000 shitcoins and you want to trade, how do you do that? You get listed on an exchange was one way, and I've looked into that, and it can cost $60,000 or more to list a new coin on an exchange. Another way is to like with the Ethereum or Binance networks is you have like Pancake Swap or some other type of swap thing where you take a token you can buy on an exchange, and you can exchange that for another token, and then use that token to do a swap through a liquidity pool for some new token that's not supported anywhere yet. And that's interesting. And I've personally lost a lot of money doing that on a bunch of little shit coins I invested on in November that are all 90% down, but whatever. What's cool about Chia and Cats and offers is there's now a button right in your wallet to create an offer. And whether or not you have the thing you're looking for, you can add the tail for the coin that or token that you wish to acquire. And you can say, look, I've got this much Chia and I want this many space bucks or crypto sheebs or whatever cat you want. And you create an offer file. And that offer file can be text, and it is a text file with a .offer extension. So you can upload that .offer file to offerbin.io or offerpool.io, and there's another one, hash.green.
You can put it
not
in
all of them.
or you can put it in
post it
on the internet somewhere. Put it
you
on
can
a
post
social
it on
media
a web
site.
page, a forum, a Slack channel, a Discord, or a Facebook group. And then anybody else can see that offer file, and they're like, yeah, I'll do that. They grab that offer file, they import it into their wallet, and the wallet says, hey, this is the offer. It is what it appears to be, or it isn't, because some people do tricky things. Like somebody tried to do a scam where they tried to create a XCH token for XCH coin. Anyway, you can import it and you can click the button, and it all happens from one person to another through the blockchain with no intermediary. There's no exchange necessary.
Yeah,
So
people have
like
posted offer files on Twitter. They posted offer files all over the place, and these offer files can be accepted, and they're on chain. And I think we can talk about the technical stuff about how they work in the next episode, but it really allows for decentralized exchange.
So comparative to my experience buying Chia, this is a whole, or most 99.9% of people's experiences using custodial wallets. This is a totally different experience of transferring a Chia, an on Chia network token or coin.
It's a very democratization of the ecosystem for Chia. You still have to get into the Chia ecosystem, and that's still not as easy as it needs to be. That's usually referred to as on-ramp. So the on-ramp into Chia has gotten a little bit better because you can wire that money to Stably, and Stably will get you to USDS. And then from there, you're in the Chia ecosystem. You can buy any old Chia asset token you want. You can buy Chia.
Okay.
That's well known. But you do need to on-ramp into the ecosystem. And after that, then it's very democratic. You can, go to one of these centralized places where people put offer files, but you can also just sort of jump into some Discord and say, hey, I'm looking to buy whatever. And if somebody likes the price you're offering, they can put an offer file up there and you can grab that offer file, accept it. And,
all right,
you could be trading today.
That's very interesting. So next time on The Third Coin, Chia offer files. So, hey, thanks for your time today, guys. That was pretty good episode, and I'm excited to talk to you next time. So take care. Have a great day. Hey, that was The Third Coin podcast, where we talk about the past, present, and future of blockchain, cryptocurrency, and Web3 technology. If you learned something new today, tell us in the comments. If you need a different question answered, ask us in our social media anywhere at The Third Coin. Please like and follow us for the latest, somewhat biased information on YouTube and podcasts everywhere.